Hey,
Hey
Michael, it's
guys,
about
good
to get
morning.
started. Good morning.
Can you hear me?
I can, loud and clear.
All right, amazing. Good morning. Thanks for having me.
No worries, no worries. Hey, everyone. My name is James Bailey. I'm the CEO of SubQuery Network, and I'm been lucky enough today to be joined by Michael. Maybe we'll just made a few more minutes, Michael, for a few more people to come in. Where are you calling
Yeah,
from
of
this
course.
morning?
I'm calling from the Netherlands. I'm based in the Netherlands myself. The company is based in Hong Kong, so that's where most of our people are. But in general, we're quite spread around the world, I would say.
That's a big time zone difference. How do you do early mornings or late evenings?
Both. We just
Both.
work all day. That's basically the thing.
I imagine the quietest time for you must be around lunchtime. You're just going to go out and enjoy the sun.
Right, right, right. Well, in the Netherlands, you don't have that much sun, but we try to catch some whenever we can.
Fair enough. Fair
No,
enough.
no. Yeah, no, that's true. But no, things just keep going all day. But that's okay. We like it.
Yeah, I'm calling from New Zealand where this is our summer period right now, but
Right.
you wouldn't know it here. We've got this big cyclone coming through. We've had these massive
Oh,
flooding the last couple of weeks, and it's
oh,
all
that must
on
be
right
horrible.
now.
Yeah, that's
Yeah,
horrible.
it's like
What
it's
time
like
is it
winter.
in New Zealand?
It's about 10 p.m.
Oh, 10 p.m. Wow. Yeah, that's 12 hours.
Just like you, nothing ever stops in the
Right.
World War III, right?
No, no, that's very true.
Mm. Well, let's get started, Michael. Thank you very much for joining us today. Michael Ehart is from Skynet Trading. Michael, do you want to start by introducing yourself to people listening?
Yeah, for sure. For myself, I've been in this space since 2014, more or less. Started out mining altcoins back in the day, and basically, well, was present for every cycle since then. Been in and out advising and working on some projects over the years, and only recently, about a year ago, I joined Skynet Trading. Jordi Fine, which is the founder of Skynet, is a good friend of mine, and he essentially asked me to help grow the company further. So that's when I joined Skynet Trading. Skynet Trading obviously is a market maker, so we focus on providing liquidity in the markets, making sure that other traders always have a counterparty to trade to and the best price is available. Yeah, and we basically do that for a lot of projects as designated market maker, both on centralized and decentralized exchanges.
Wow, so that's been around for some time. I'm curious to know what altcoins you were mining way back in the day.
You have coins like Vertcoin. Yeah, well, you had all of them. I remember back in the day, you had a cycle where every country supposedly should have had a coin. There was a time there was Iceland coin was very big in the news as well. You could basically mine these things, and then every person in Iceland was supposedly got a free airdrop of those tokens as well. Went nuts, like top of coin market cap for a bit, even surpassed Bitcoin basically. So we're crazy days. Yeah.
Yeah, I remember one of my earliest experience of hearing about Bitcoin was I think the day when it passed $100. And
Right,
I
right, right.
remember
Yeah,
like
yeah.
I was young at that time. I had no idea like how the hell am I going to get my hands on a Bitcoin? Like I don't really know I don't have the technical skills quite yet to mine it in my life. I probably could have worked
Right,
it,
right, right.
figured it out.
Right. Yeah, it was a fun time. I mean, yeah, basically in 2017 you had the ICO cycle, right, where you could get in early if you got into an ICO. 2013, 14, you basically had the same thing where a new proof of work network launched, and then if you started mining in the first couple of seconds, you got a few big blocks that you otherwise couldn't have with your hash rate. Was pretty interesting.
But how neat is it that your journey in crypto started with mining
Right.
before, and then kind of getting involved in those ICOs back in the day, and now you're here working for Skynet, which is doing a market making, a kind of a critical piece in
Right.
every kind of
Yeah.
tokens launch, right? Maybe
Right.
explain a bit to people that don't know what is market making.
Yeah, it's for most people it's pretty complicated. It's also a bit behind the scenes, right? Oftentimes you don't really hear or know about it if you're not involved actively with either with projects or as a market maker yourself. But what we basically do is quote orders in the order book, make sure that there's always liquidity to trade into. So we serve as a counterparty, and essentially make sure that if you want to buy or sell a token, and particularly the smaller ones, that there are orders available. That's what a market maker does. So we don't provide any directional exposure or something like that. Sometimes a misconception that people have about market makers, but it's really ensuring there is liquidity and helping projects navigate the liquidity landscape.
Hmm. And like obviously we're into a different market cycle right now. Like back in
Right,
2021, right? We're in this massive bull cycle. 2018, we're in a bull cycle. 2020 it started. 2022 even started coming down a little bit. How have you
right,
found things change, right, over the past 6 to 8 months, right? We're in the bear market right now. We're kind of almost probably at the
right.
bottom or near the bottom.
Yeah, let's hope
That
so.
must
Let's
have
hope so.
that let's hope so, yeah. But that must have changed your business quite a bit, right? It must have changed kind of the way you operate.
Sure. Sure, yeah. One thing we see is that we account for a much larger share of the market these days. So whereas in a bull cycle, you have people trading organically all the time, right? And now this counterparty component becomes increasingly more important because simply liquidity is drying up, right? This is particularly true on decentralized platforms, but also on centralized platforms. Also in the wake of FTX, where people sort of lost faith for a bit in centralized outlets. And yeah, then the landscape really did change. You see, have less liquidity, less trading, less people placing orders in the order book. Projects obviously see that their token is going down, so they have less. The size of their treasury shrinks. And these things you all have to take into account and still make sure that people are able to trade your token. So it's definitely a big change from the bull market.
You mentioned, obviously FTX, which is, I guess, the massive elephant in the room here.
Right.
That going down kind of really put a dampener on the day of many of us. But you mentioned people have lost faith in centralized outlets. Do you think that faith will return over time? Do you think people kind of going to forget about this and come back to it? Like in a way, like it's kind of like
Right.
people's experience with like big natural disasters where we think, oh God, we got to solve that, but then also kind of just lose track and forget about it after a while.
Right. Sure. Well, yeah, indeed said lost faith, and I think that was indeed the case for at least a brief while, honestly. But I think also the crypto space in general has a pretty short memory span in these kind of things, where basically major event happens, and then a couple weeks later, if the market moves a little bit on the upside, people tend to forget a lot of things. We also saw that with Binance for a bit, right? There was some FUD around Binance a couple weeks ago, I think. You had these massive outflows from assets from Binance. I think it was the first couple weeks, days of net outflows from Binance for years. But then, things resolved itself, and then everybody forgot and deposited all their funds back to Binance again, and now it's just business as usual. So I think in most cases people may be a bit more cautious with the funds that they leave on the exchanges, but in general, I think most of the faith in that respect is restoring already. Yeah.
Mm. Do you specialize like in certain types of exchanges or decentralized exchanges? Do you tend to prefer working in a DEX rather than a SEX, or the other way around?
Right. Well, I think we basically do all of it.
Mm.
Centralized exchanges are typically easier because they're all very similar, right? You trade through API keys. You use the sub accounts, and every tool that's available on there, and they typically all have those tools available. At least the larger ones. For DEXs, this is completely different. Most of them are very young. They are still developing their API endpoints. They're still developing some of the crucial pieces of infrastructure that you may need, like batch orders and advanced trading capabilities, essentially. And on DEXs, we see that we often also have to work with projects to make sure that these things are present and that they do get developed. So that's a completely different game, I would say. But I do
Mm.
really like the DEX component as well, and especially if you combine it with centralized exchanges, because you can do a lot of arbitrage strategies. You can make sure that pools have the liquidity that they need. Also with the Uniswap v3 components, that just opens up a lot more capabilities, right? With the concentrated liquidity, range orders, and now you also see a shift towards order book based dexes. I'm very curious to see how those are going to develop as well. I remember back in 2017 you had Ether Delta, which was like an order book dex on Ethereum. Well, I don't know if you were around back in the day, but the block times of Ethereum are relatively long, and finality is also
Yeah.
takes a bit, right? And that makes an order book DEX pretty complicated to trade with.
Mm.
But nowadays these things are a lot quicker, right? You have sub-second finality on some networks, and that opens up a lot of possibilities. So I'm really curious to see order book DEXs develop over the next year too, and how market makers and traders in general are going to play a role there.
Yeah, that's interesting. I was talking to an ex-trader who used to work for a big American bank back in the 90s, and he was
Right,
telling me that some of the strategies that they used to employ when they worked in the early days of the digitization of the stock exchange,
right,
basic arbitrage kind of plays and many others that are way above my pay grade, they're still they're valid in dexes and other kind of crypto markets right now. Like it's somewhat immature that you can still kind of try these old strategies that high frequency trading bots are kind of eliminated in the retail
right.
market. You can do that in crypto now.
Right. No, that's definitely true. I mean, you still see very basic arbitrage strategies that turn out to be profitable in some cases in the crypto world, like cyclic arbitrage, which is essentially where you trade between three assets on a decentralized exchange.
Mm.
You trade into one of them, and then you swap one for the other, and then you end up with the asset that you started with. And these strategies actually are still profitable in some cases. And the difference now with decentralized infrastructure as opposed to centralized back in the day is that you have this concept called atomic swaps, where you basically can guarantee profit. So you essentially put all of this logic into a smart contract, and this smart contract only executes if all parameters, and one of those parameters is, am I going to make a profit on this trade? If all of them are met. So that is pretty interesting and opens up a lot of possibilities for sophisticated traders, I would say.
Yeah, yeah. Has it kind of take you back in the day? You're like, oh, I used to do that back in the days, and
Yeah.
and a lot of it, I guess. But hey, it's you can spend hours talking about trading strategies, and it's not really the thing that we're
Right.
here to talk about, right?
Right.
um,
Right. Right.
in terms of so you've seen a lot of like you had this pretty kind of broad, eagle-eyed view of the entire kind of liquidity landscape, right? You
Right.
connected into all these major centralized exchanges. You're kind of dealing with a lot of dexes at the moment. Where have you seen liquidity kind of move to? Like I imagine a lot of it, the FTX liquidity has kind of moved to Binance, for example, or other exchanges, or has it all moved to dexes now? Like, are people shocked by the FTX collapse? They've all kind of fled to decentralized exchanges.
Right. Yeah, a lot of the liquidity is definitely on Binance, right? I think
Mm.
it accounts for really the majority of the trading. Some of it is on Coinbase and the other major exchanges, but particularly on smaller ones, a lot of the liquidity, at least the organic liquidity, has mostly vanished or is around for brief periods of time, right? When a token first launches, for example, they can certainly have a large amount of liquidity available and also a large amount of volume because people want to trade new tokens, right? There's a lot of possibility for profits. So they're interested in that. Particularly after FTX, we thought we'd immediately see a change or a shift towards decentralized infrastructure. But I think that shift, well, it's there, but it's slower than I would have initially thought. But that also is sort of to be expected now that I think back on it, because a lot of the key infrastructure simply is not there yet for most decentralized platforms. I mean,
Mm.
barring Ethereum, where a lot of the infrastructure is there, like custodial setups, multi-sig setups, those kind of things. For institutional or more sophisticated traders, these are really necessary, right? If you're talking about millions of dollars, you cannot just have things in a MetaMask hot wallet or something, right?
Yeah.
So if you then consider newer platforms like Arbitrum, Optimism, well, they've been around for a bit, but if you consider others, the newer things, Injective, Aptos, those kind of platforms, they simply don't have access to these tools that institutional traders need. So that's why you really cannot move in size on those platforms yet. And once we do see this infrastructure develop, well, then I think we'll see a shift towards decentralized infrastructures that we'll see that speeding up for sure. Yeah.
You mentioned a few things that clearly kind of are needed for the institutional side, right? So
Right.
being able to have kind of controller accounts and not have to use your hot wallet for everything. But like, what about for the consumer side? Like, what do you think is going to, like, I imagine a lot of Binance's volume is still made up by retail investors.
Right.
What do you think is a big barrier for them kind of going full decentralized?
Right. Well, mostly the ease of swapping between chains, I would say. Right.
Mm,
If you want to go from, let's say, Ethereum to a Cosmos-based chain on Binance, well, there are only a couple of them available, but you can just swap one asset for the other on a centralized platform, right? You don't need any switches between the native blockchains of these tokens. If you want to do the same thing on a decentralized platform, right? You want to swap something on Uniswap and then use that token to trade on Osmosis, for example, right? One of the major DEXs in the Cosmos ecosystem. Then you have to go through all of these bridges, which is
yeah.
time consuming, it costs money, and bridges are prone to errors or hacks, and they are considered to be, well, at least a little bit risky. And for the average user, this is way too difficult, right? If they even know that these tools are available, right? If they even know how to bridge from Ethereum to Cosmos, then it still takes a while. And I think that's the major barrier, I would say, for people trading in a decentralized way at the moment. The need for bridges and the need to use like 4 or 5 different web interfaces or platforms to actually swap from one to the other.
Yeah, yeah, no, that's very much true. Bridges are still a bit of a necessary evil in this day and age, right?
Right.
They're terribly insecure, but they're kind of so critical to be able to move these things around. One thing you have mentioned, I've noticed you mentioned a lot of Cosmos chains in today's kind of session. Are you quite into Cosmos? Is that
The one. Well, we operate on all blockchains essentially, right? We also
mm,
participate pretty big in the Elrond or Multiverse X ecosystem. In the near ecosystem, we have quite a few clients also on the decentralized side of things. But we do see Cosmos coming up quite a bit, also in newer investor decks that we get across our desk. Also in the decentralized infrastructure space. So yeah, that it's one of the areas we are definitely looking into.
yeah, no, it's very true. I'm one one question I have for you, I guess, is a kind of broad question is when projects like SubQuery, we've gone through this, and a lot of other crypto projects have gone through this process, and that is writing up your white paper
Right,
and coming up with your tokenomic strategy.
right,
You must see a lot of these white papers come across your desk,
sure.
and you must see a lot of tokenomics come through. What makes a good one, and what are some serious like red flags that your team and yourself kind of watch out for in tokenomics, so that you can kind of share for other people here that kind of looking into projects?
Right, right. Yeah, there are various. One I can definitely say also from a market maker point of view or a liquidity provider point of view is that there are projects that don't take a liquidity budget into account, for example, right? If you want to trade on
Mm,
a centralized exchange, you have to have some sort of decentralized as well, actually. If you want to trade anywhere, you need to have some sort of budget available for liquidity purposes. Now, this can be, depending on the size of your project, the sizes differ, of course, but it has to be in there. So that is one red flag if there is no liquidity budget available, for example. That's something we definitely look at. Other things that we've seen, particularly in the past bull cycle, and I think it was also one of the things Alameda and FTX were pretty big on, is these very small initial circulating supplies, right, and then very drawn out vesting schedules, which essentially just created continuous sell pressure, right, on the token. Now this
mm,
initially, for the initial token holders, is amazing, right? You get this very small circulating supply, so small initial market cap. People that don't look too deep into it think, hey, this can go, 100x or 200x or whatever, how much you want to call it. But then in the end, you see all these tokens hitting the market day after day after day. And you just see a continuous sell off, right? So I think that is now considered to be a pretty big red flag if that's not considered or thought about, how this is going to be absorbed, right? Um, So that's one thing for sure. The other thing is if there's a mismatch between this inflationary component or the unlock component and value creation or value capture within the token, right? There has to be some balance there. And the project certainly has to consider how that balance is achieved, because otherwise you're going to have this continuous downward spiral for your token price. And there's really no reason for initial buyers to do anything with your token, even though your project may be a perfect fit for the crypto market, right? The thing or value add that you have as a project can be immense, but there still has to be some way that your token fits into this. Yeah.
Yeah, no, there's a few things here to think about.
Yeah. So that's those are a
Do
couple
you
of
think
things that we definitely consider.
do you think we're past that age of kind of these terrible, trashy projects coming through, or do you think we'll never escape
No,
that in this kind of
I
industry?
don't think we'll ever escape that, particularly as long as regulations are relatively loose in the space, and because of the decentralized nature, you will always have the ability for people to create projects and launch projects, free from any traditional constraints, I would say.
Yeah, that's a good point, right? Like you're operating in a quite a tightly regulated space. Do you like? What's your view in it? There's some argument people make an argument that regulation will kind of ultimately harm Web3, or it's impossible to kind of regulate Web3. And
Right,
there's some people saying that it's kind of critically needed.
right.
Do you think there's a middle ground?
I definitely think there's a middle ground. Yeah. Honestly, there are things like for example what happened with FTX, right? This is more of a centralized issue than a decentralized issue, I would say. It was basically mismanagement of funds, and actual fraud on a corporate scale, which was not regulated, right? They were able to do these things and continue operating the way they did for years, without any oversight. And now you actually see, now that they've investigated these things, that a lot of the things were wrong, and that they were actually going wrong in the same way that they did, for example, in the years leading up to the financial crisis in 2007 and 8. And I think regulation in that sense, so looking into reserves, and outstanding liabilities of major crypto corporations is very important and something we definitely need. At the same time, I think it's also very important to retain the ability for founders and projects to launch their projects and launch their tokens and actually do raises, and raise money that they need to build their projects in a decentralized way. So excluding jurisdictions, for example, is a very bad thing, I think, and also not really necessary in the end, because people can, I think at least, make informed decisions themselves, as long as they're legal age, etc., and all the other components like AML, KYC,
Mm.
they are good to some extent, I would say.
Yeah, no, that absolutely makes sense. This is my last question of the session. I thank you, Michael, for being a very fantastic guest and explaining some pretty wide concepts. If anyone has any other questions from the listeners, feel free to raise your hand and request to speak, and then we can get to some community questions after this. But my last question is, I guess, you operate in this space on a day-to-day basis. If I come to you asking for advice on, I want to launch a new DEX or some kind of exchange based, whether it's an order book or a kind of a pool based exchange project in Web3, what would be your advice to me? If I want to launch a decentralized exchange?
Right. Well, it depends on a lot of factors, of course. Right. Advice in what front? But one thing I would definitely consider is, particularly looking at, what's already there, is looking into how easy it is to use your platform and how easy it is to incorporate your platform, sort of as a building block for other platforms. That's something we see quite a lot nowadays, where
Mm.
essentially you have these exchanges that basically serve as the backend for other use cases. So they have their system set up in such a way that you can basically use all of their services, by implementing a widget or a small snippet of code within other systems. And this creates such an immense flywheel if done correctly, where other projects have access to your liquidity and the trading infrastructure that you have in the backend without having to develop this themselves, and essentially push volume and liquidity to your platform continuously. That's one thing I would definitely consider if I were to launch such an exchange at the moment. Other factors to consider is, where is the liquidity at the moment? I mean, you can launch a decentralized service on a new layer one, which is amazing. You'll be the first. You'll do everything right, right? But then there's no liquidity because it's a new layer one. So how are you going to actually scale that business? That's very difficult.
How are you going to capture that value?
Right. I mean, those new chains, they typically tend to have a lot of hype, but are they actually going to attract liquidity? That's something we see right now a lot. Most of the liquidity is still basically still on Uniswap, right? And then you have a couple of other DEXs across other layer ones that have attracted some liquidity. But in the end, a piece of trading infrastructure is really dependent on the liquidity on the layer one that's available. So I would definitely really look into that component as well, not just go for the newest flavor of the month layer one.
Do you think we have too many DEXs?
No, I think the competition is amazing and definitely necessary. And we also see some of the DEXs introducing novel concepts that we hadn't seen before, which then either give them an advantage or an incumbent can take that idea and develop it upon it themselves, which is also positive, I would say. So no, I don't think we have enough. No.
Excellent. I don't think there are any questions. I see some people raise a question or raise their hand briefly, but no one's kind of held it up. So in that case, thank you very much, Michael Earhart, for joining us this evening or this morning for you, and wherever you are in the world. Thanks for listening and hearing us about the importance of liquidity for digital assets. We had a wide-ranging conversation that we recorded. Actually, Gotti has just requested to speak. Maybe I just see if he wants to ask a question. Otherwise, we can close this up.
Yeah, thank you very much. Was a pleasure. Thank you for having us.
Yeah, no. Gotti, can you hear us now?
Yeah, can you hear me?
Yeah.
Like,
Go ahead.
yeah, like I'm just joining the space. I've not been in the conversation with you guys, but for some time now, I've been following Skynet trading. You understand? And then I have some few questions because currently I have a project that my team and I have been working on. We've been on the project since the last quarter of last year, and we are still working. You understand? Like according to what we're having on our roadmap, by the second quarter of this year, we start our marketing campaigns and marketing rally. I don't know, is there any way Skynet will be of help to our project? Because what we're bringing to the market, let me just give a breakdown of what we're building. Like we're going to have our own coin, we're going to have our own token, and we're going to have our own centralized and decentralized exchange. Like our centralized exchange is going to function like Binance, KuCoin, MXC, Gates.io, and the rest of them. And our decentralized exchange is going to function like Trust Wallet and MetaMask. So we have a lot of features that we've seen that most centralized exchange don't even have, even both some decentralized exchange don't.
Sorry, Gotti, are you still here?
I might have lost him. Okay. I think hopefully the recording will be quite a... Oh. No, we're back.
Sir, I didn't hear you.
Go ahead. Can you hear us now?
Yeah, I can hear you.
Okay, you dropped out for a little bit.
Okay. It sounds like you should listen to the recording of this. We touched on a few kind of features and stuff that that I think Skynet, that Michael said would be quite valuable for Skynet from any kind of decentralized exchange. But I guess you're asking right around, like, can Skynet be of help to help build the kind of community awareness?
Yes.
Potentially, but I think it's more on your project, right? You kind of have to come up with the value for your target, user or customer base, and gets them directly, find out if it's valuable for them, and kind of organically grow that rather than rely on a third party like Skynet. I assume that's the case.
Exactly.
Michael.
Yeah, no, I completely agree there. As Skynet, for one, we're not a marketing company. Obviously, we help companies that are going to launch on an exchange or decentralized exchange in the last few stages of their development cycle. But this is something that only happens later on in the process of launching your token, I would say. That being said, we're always happy to evaluate your project. And for that, I would suggest you just reach out to one of our team members, and they'll be happy to have this conversation with you.
That would be very nice. Like for now we have a good plan on how we get a good. We start up, we come up with a good marketing scheme and all of that, and we have a plan already on how we'll be able to grow our community organically. You understand? We have large audience and large community.
Right. That's good.
So if I want to reach out to any of your team members, how am I going to reach out to them? So we can know how we can start going about it.
Sure, yeah. No, I suggest you go to our website, skynettrading.com, and essentially send us an email on the email address that is listed there.
All right, that would be nice. Thank you so much. Thank you so much.
Of course.
That's a good segue as well, Michael. How will people kind of follow you and keep in touch with you?
Right.
Yeah.
So
yeah.
me personally,
Okay.
I'm not that active, but I have a Twitter account which is ML Earhart. That's the handle. Then on Skynet, we have the website essentially, and this Twitter account which is Skynet Trading _. And we do most of our communication through Telegram actually. So most of the people are also on there.
That's our life these days, isn't it? Telegram.
Right. Everything is happening there.
Hey, thank you very much, Michael, for your morning, and appreciate you joining us to talk about these topics. Thank you very much for your time.
Thank you very much for having us, and see you soon. Bye-bye.
See you soon.